Hi, everyone. We're very happy you joined our LinkedIn Live. We have the second LinkedIn Live already this year, and this time we're going to talk about anti-money laundering. A lot of discussions and a lot of things happened this week when it comes to specifically the anti-money laundering directive and the anti-money laundering regulation in the European Union. So it's going to be specifically focused on the European Union regulations. As you know, EUCI is an advocacy organization working in the European Union, mostly in Brussels, with the European Commission and the Parliament, the Council, mostly leading discussions, educations, etc., when it comes to different regulations and directives connected to the crypto assets. And one of the most important, I would say, packages that we have worked on for the last few years, so that's been a really, really long process, has been the anti-money laundering package, which consists of a few different documents. And we're going to talk about it today. And we're also going to explain a little bit more what happened in the last 2 days, and also trying to explain what the implications will be when it comes to customers, so users of crypto assets that do transact with crypto assets, but also crypto asset service providers and other entities. And I'm very, very happy that today Seth joined us. Seth is very, I would say, established already in the European Union as well as in the US. He is working for Ledger, and I know that he has been following very, very closely everything that's have been happening regarding AML regulation. So thank you for joining us. Seth is the global head of policy at Ledger, and he has been, I think, spending a lot of time when it comes to crypto regulation in Brussels, but specifically also on the anti-money laundering packages. So he'll also be able to answer some of the questions you'll have. We'll leave that for the last maybe 10, 15 minutes of this discussion, and we'll aim to have a discussion around 40 minutes, maybe 1 hour, depending on how curious you'll be about the topic. Seth, again, thank you for joining us, and we're very happy to hear more from you.
Well, thank you very much for the opportunity, Marina, and for that kind introduction. As Marina said, my name is Seth Hertlein. I have the privilege of leading policy for Ledger, and it's been 2 years this month, in fact. So, very, very excited to have that opportunity and to get to know the EU system and sort of the legislative process there. As Marina said, I've been very focused on this package in particular, but all of the different crypto measures that have moved through Brussels over the last 2 years, really starting with MiCA and the transfer funds regulation, which sort of flowed almost directly into the anti-money laundering package that we'll discuss later today. So I've been involved for a couple of years now. Have spent a lot of time and a lot of meetings in Brussels on these files, and thanks again for the opportunity to talk about them here today and hopefully share some insights.
Thank you so much. And I'll start this discussion with a very short introduction to the topic. I think what is pretty important right now is that we're very clear when we're discussing this topic, because it can be very hard to in a way also understand, not only because the topic is pretty complicated, but also because there's many different files that we're working on. And we have prepared a very short presentation. We have only 2 slides, so we can put it on so you can check it out a little bit. I think what is important, at least for the beginning of the discussion, is really to know more about the timeline and what's going on, and then also what are the differences, or in which way those files are also going to in a way address the share of information when it comes to crypto asset service providers and of course the other users that directly use crypto assets. So at the beginning of this current commission's mandate, the commission has in a way started with a very ambitious package. The package was the whole anti-money laundering, contra-terrorist financing package, and it consists of 4 different documents. One has already been finalized, which is the transfer of funds regulation, which Seth already mentioned before. And that one is in a way describing the travel rules, so how the travel rule is being implemented in the European Union when it comes to crypto assets. The transfer funds regulation existed before, but there was a revision and the parts specifically that were regulating crypto assets were added. So that was really important. That happened already more than a year ago. The discussions were, I think, pretty rushed at the time, also because of the conflict that happened in Ukraine. It was very, very important when it comes to sanctions regime. So the transfer funds regulation will also be pretty quickly applicable at the same time as MiCA, the Markets in Crypto Assets Regulation, which I'm sure that you have heard of before. So what is really important, many times we talk about MiCA and the MiCA's implication, and in a way what the outcome will be when it comes to crypto assets industry as a whole. But we don't mention often the transfer funds regulation, which is again going to be applicable at the same time as MiCA. So this was the first document. Then we have the AML regulation and the AML directive as well within this package, and the AML authority regulation, which is basically one that describes the new authority that we'll have in the European Union, what the, in a way, the powers of this authority, what is the obligations that different entities have towards the authority, so basically reporting, etc. And in a way, the idea was really to unify a little bit more all the regulation when it comes to anti-money laundering within the European Union. So you can see the dates here. The whole package was really discussed over the last few years. As I mentioned, the transfer funds regulation was the first one that was finalized, and it will be applicable. But what happened last year and what we discussed and why this is important, because the European Parliament and the European Council reached a provisional deal on the remaining files of the AML package, mostly on the AML regulation and the AML directive. But the whole process is not finalized yet. So especially when it comes to the regulation, we have had a very important political trialogue meeting that happened on Wednesday night, and we're going to have more meetings in the future up to probably April or maybe May, depending on how the whole process will go. Those are going to be a little bit more technical. So whatever we're discussing here, there are no finalized provisions yet when it comes to the AMLR, so we don't have the final draft, but the most important, in a way, topics were discussed. Some were already mentioned in the trialogue on Wednesday, some will be discussed later on when it comes to technical meetings and technical discussions. So as you see, these things take a lot of time. But of course, as everyone knows here, the elections are happening in the European Union very soon, during summer this year, 2024. And before that, everyone is rushing to finalize all the documents, packages, regulations, directives that the European Commission started at the beginning of this mandate. So this is not, there's no difference with AML. Everyone, especially the Belgium presidency, they really hope to finalize the whole package before the start of the elections, so it could be closed within this mandate already. The second slide that we have prepared is talking a little bit more about what are we discussing here. So what is the very important part of the whole AML regulation directive and the transfer funds regulation? It's mostly, especially when it comes to transfer funds regulation, it's sharing data when a certain transaction is happening. So what is the data that is shared between, for example, a crypto asset service provider and another crypto as a service providers when when transactions are shared, even when it comes to crypto assets in this case, and between a crypto as a service provider and an unhosted wallet, or as the text has changed, a self-hosted wallet, as we call it. So those are pretty important things, I would say, even for everyone that is using crypto assets. As of today, right now, at least in some of the jurisdictions in the European Union, we can still transact and use self-hosted wallets that are then connecting to a crypto as a service provider, for example, as an exchange, without strictly and directly KYCing those wallets, or without really sending information and identifying those wallets. But that will change when those regulations are going to be applicable. What it is important is that again, we saw that, and we can talk about the transfer funds regulation because that part is finalized, is that the peer-to-peer transactions are excluded. And there's a lot of discussion about what the peer-to-peer transaction is and how do we define that. I think we're going to have a lot of questions asked me maybe also in the future. But in general, at least from my understanding, I would describe that that's mostly transactions between individuals. So the transactions that are happening that I'm sending, for example, to one of my friends. But when there is a crypto asset that will need to be involved, those transactions are definitely not excluded. When it comes to DAOs, DeFi, etc., maybe some form of organizations that are decentralized and that would not fall under the crypto as a service provider, that would be a big question. And I'm not sure I have a very, very concrete answer for you right now, also because that part specifically is somehow linked also to MiCA. As you know, the Markets in Crypto Assets regulation does define what a crypto as a service provider is, and a part in MiCA also describes that in a way the organizations that are fully decentralized without intermediaries, they do fall out of scope of MiCA. And somehow there is the connection to MiCA because crypto as a service providers were first described there. And what we have argued as an organization, and I think many others have done the same, was that we need to have a consistency when it comes to all different regulations and directives that would touch upon the crypto assets industry, and trying to basically align with what MiCA as the first regulation that mentioned crypto assets described. And most of the times, the question around that is really the definition of a crypto as a service provider. So I'll stop here, and I'll leave some time for Seth to react and to add anything that he would like to in terms of what I just briefly discussed.
Yeah, well, thank you for the introduction and setting the stage on the topic there. You know, I think the one thing that I would add, I think, to really just help the audience sort of understand is a little bit more depth on the transfer funds regulation, because that's, as you mentioned, that's the first part of this four-part package to be completed. And so we actually have the final text of that, at least at the layer one level. You know, I think sort of understanding that as the foundation or the baseline, you know, then we can talk about how the AMLR is consistent or inconsistent with that as the base. So I think the most important thing for folks to understand about the TFR or transfer funds regulation is are the scenarios in which it applies, and there's really four. So I think of these four as sort of being on a spectrum, and so at one end of the spectrum, which would be for example, a CASP to CASP transfer. The full transfer funds regulation applies, full travel rules apply, or travel rule applies. What that means is the sending CASP has to transmit along with the funds complete information about the sender to the receiving CASP. And so sort of embedded in that requirement is first, the sending CASP has to obtain the requisite information about the sender. so that it can then transmit it to the receiving CASP. At the other end of the spectrum are pure peer-to-peer transactions. And so that could be, as Marina described, maybe you sending between two of your own addresses, or sending from your wallet to, or I could say send from my wallet to Marina's wallet, right? That would be a pure peer-to-peer transaction. It's directly on the blockchain. There's no CASP or intermediary involved. That scenario is totally out of scope of the transfer funds regulation. So the travel rule does not apply at all in that context. So those are sort of the two bookends. And then there are two more interesting scenarios in the middle. And that's really what the transfer funds regulation is all about, are these sort of two middle scenarios. One is a CASP transaction with the CASP's with the self-hosted wallet of the CASP's own customer, right? So this would be basically a customer sending crypto assets from their wallet to the CASP, or withdrawing from the CASP to their wallet. In this situation, the transfer funds regulation requires the CASP to verify that its customer indeed owns and controls that wallet address. It doesn't exactly specify how, it just requires them to verify ownership and control. There's really two ways they can do that. One way is referred to as a Satoshi test. Basically, it's a requirement that the owner send a small amount of crypto to the CASP to verify that they have the ability to sign a send transaction. The other way, some blockchains allow what's called a message signing transaction, where you can sign a message on the blockchain without actually transmitting value. It's another way. Basically, you're proving that you have access to the private key, which enables you to sign and execute a transaction. The other scenario, the fourth scenario under the transfer funds regulation, is a CASP transaction with a self-hosted wallet other than of their customer. So this could be where a customer directs the CASP to send some of their assets to someone else, or a transaction between an EU CASP and a non-EU CASP. So for example, a customer could direct their EU CASP to send money to a CASP somewhere else, say the United States, for example. So in both of these situations, the transfer funds regulation requires a risk-based approach to determining whether the CASP, the EU CASP, needs to do additional diligence on either the sender or the recipient related to that transaction. So these are the baselines, I think we can sort of transition now more into the AMLR. I'll just start with this observation, which is there's not a lot of difference, or maybe another way to think of it is the AMLR doesn't really change much from the transfer funds regulation, which to me sort of begs the question, why do we need two regulations on the same topic within 6 months of each other that don't really change much? But I think with that, I'll turn it back over to Marina.
Okay, thank you so much. That was a very important topic. I could add that during the negotiations, we had already the transfer funds finalized. And as we mentioned before, some of the very basic things were defined there, and very similar topics were also discussed within the AMLR negotiation process. And we have seen different drafts from the European Commission, European Parliament, the Council, etc., and those were pretty different between themselves. What we have seen added, and maybe some of the topics that are interesting at this moment and that have also been discussed and written in the articles this week, were pretty much a lot on the topic of the very specific on the topic of the crypto assets. First, what was important and what we were looking into, that was in general comparing crypto assets reporting standards with the fiat standards, or when it comes to customer due diligence process. So that was mentioned many times, where in a way all the whole package, all the documents were taking this approach where, for example, the crypto assets were seen as a riskier instrument, and then the thresholds were lower than what we use, for example, for cash. Usually the thresholds were around 1,000 euros, and that was a very important thing. So as we know, the crypto assets are a completely new group of assets that was firstly defined in the markets in crypto assets regulation, and in a way similarly regulated as a financial instrument, but not to such an extent. So this again would be a completely new set of assets. But when we look at them from the anti-money laundering regulation, the legislator in this moment saw it as a little bit riskier than if we think about cash, for example. And there's a lot of I would say arguments that we have heard about that. Maybe I would like, this is just the start, but I would like also Seth to comment on that part. I think this is really one of the most important parts in any type of anti-money laundering regulation when it comes to crypto assets in Europe.
Yeah, I mean, I think Marina gets to sort of what's motivating really this entire package. It's partly, I think, misconception still. A lot of myth that crypto assets are somehow riskier or more likely to be used for criminal purposes. All evidence to the contrary. There's no data to actually substantiate those claims. And in fact, the co-legislators here, as well as the relevant ESAs, have not offered any evidence that there's actually greater use of crypto assets for illicit purposes. And in fact, all of the data and evidence that we do have is that cash, fiat currencies, are significantly more used for illicit finance on both an aggregate and a percentage basis by orders of magnitude. I mean, cash is truly anonymous. There's so much ink spilled in the TFR and the AMLR about enhanced or anonymity enhancing crypto assets, when in fact cash is the only truly anonymous asset. I think a lot of those myths and misconceptions have driven this particular package, and/or it's sort of window dressing for just an otherwise hostility toward digital assets because it's a new and disruptive technology and threatens to disrupt entrenched interests in the banking sector, for example. Be that as it may, and the industry, and including EUCI and we at Ledger and many others, made these points during the legislative process on this file, and were sort of rebuffed or disregarded, explicitly so in a recent bit of guidance that came out of the EBA just this week on the 16th, in which commenters on some new guidance on crypto asset risk profiles and customer due diligence recommendations. A number of commenters specifically made these points and pointed out that the incidence of illicit use of crypto assets is significantly less than cash, and therefore should be deemed as less risky. And the EBA simply sort of said, agree to disagree, as usual, without providing any evidence for their position. So that's unfortunate. And I think leads to poor policy outcomes, but that is sort of the state of affairs that we have to deal with in the EU.
Thank you for those comments. I would add something else for everyone that might not be following the transfer funds regulation process very closely. We, as mentioned, we have finalized the document, and then the secondary technical process already started, as Seth mentioned, with the European Banking Authority. And the European Banking Authority already sent and finalized guidance on how to use and how to, in a way, apply the transfer funds regulation. And there were specific parts that were mentioning, let's say, self-hosted wallets, and also when you mentioned before, set the risk-based approach. So when certain aspects are flagged as riskier, as important to, in a way, look deeper into this process, and many times also the self-hosted wallets were involved and were a part of this guidance. So I think that everyone out there that is using self-hosted wallets, as Seth mentioned before, there will definitely be some changes when it comes to interactions with crypto as a service providers. And that's going to happen very soon. So basically, it's going to be at the end of this year, when the transfer funds is going to be applicable. And we discussed about self-hosted wallets a lot. So that was the other very, very important topic. I know that at the time when the first draft specifically from the European Parliament came out, we discussed a lot of about self-hosted wallets. They were also defined in a different way at the beginning, and then changed how we call those wallets. It was self-hosted, and before it was unhosted wallets. So the self-hosted wallets are something that is really a core to our industry, a core to anything that is connected to blockchain. It's been important from the beginning. You need to own and in a way care about and have in a way access to your own crypto. Could it be Bitcoin, Ethereum, any kind of other crypto asset? So that was, again, something new for everyone that was involved in the process, and that was something also that was discussed a lot, to the naming, to the definition, and then again the use. And many times right now we already seen, I think the Netherlands has already similar rules already implemented, and they do those. I mean, if you're a user in the Netherlands, you do go through certain protocols very similarly as you described before, set through the Satoshi test or a signature, but that will most likely be the reality for all the users going forward. And maybe I'll stop a little bit here and give you again, if you want to comment anything on the whole notion of understanding and how self-hosted wallets were discussed during this period.
Yeah, I think a couple points that I think are important to make, in part due to some of the reporting that I've seen recently around the political agreement on the AMLR. It's important to understand what the TFR and the AMLR apply to and what they don't. And very simply, they apply to CASPs and financial institutions. They do not apply to wallets or wallet owners or even wallet producers like Ledger. They do and will affect CASP interactions with customers' self-hosted wallets, but neither the AMLR or the TFR directly regulate the wallets themselves. And the reason that I point that out is because I've seen some sort of misleading headlines that suggest the EU is banning self-hosted wallets. It's not true. It's not the case. There were a few amendments in both of these files in the European Parliament that would have done that, but thankfully those amendments were not adopted. And so what these regulations do is to establish for CASPs what steps they have to take to verify the identities of their customers, to verify ownership of their customers' wallets, and then to transmit certain of that information along with transmittals of funds to other financial institutions. So I think that's an important baseline. European citizens will still be able to own and use self-hosted wallets. They'll still be able to transact on a peer-to-peer basis with others, self-hosted wallets. The main impact of both of these bills on self-hosted wallet users will be their interactions with CASPs will likely become more difficult and painful with sort of more hoops to jump through. And so Ledger cares about this issue because it affects our customers, and it will affect their interactions with CASPs, potentially making those, as I mentioned, more difficult. But it doesn't change the main fact, which is Europeans will still be able to own and use self-hosted wallets.
Let's jump to another very important topic, which is the privacy, and especially financial privacy when it comes to crypto assets and using and transacting with crypto assets. I think this is in a way known to everyone that for the first time in history, we are transacting with an asset where if using public blockchain, the transactions are visible. Of course, we're doing it in a pseudonymous way, so it's harder to identify the users, but the public addresses, the time of the transaction of the asset, and the amount of the asset are all in a way public and cannot be changed. Thus, this is the basics of the trust and of the ledger, of the public ledgers that we're discussing about. So that was pretty challenging when it comes to thinking about how to regulate it, and of course also something that the legislators thought about for the first time when they were in a way discussing those topics. When it comes to privacy, again, it is very important, I would say, again, for the whole ecosystem to basically understand that there's also a privacy and a financial privacy that we need to talk about and that we understand within the crypto assets industry, because it is so different from what we're used to when basically transacting with fiat. And in this case, something happened during the negotiations. At the beginning, we had, of course, the first draft that usually happens, the European Commission sends and in a way writes the first draft, and then the whole process starts in the European Parliament and in the Council. And during that time, we had the so-called Tornado Cash event that happened, and that was discussed also in Brussels. It was discussed in the Parliament, it was discussed within the Council, and that also brought and had an impact to the drafts at the time when it comes to AMLR and the AML directive, of course. That part was named, and it was in a way, the result of that was that some of the drafts were mentioning that the privacy coins should be prohibited and could not be in a way used by financial institutions. And there was also a mention on anonymizing techniques and limitation on anonymizing techniques, and again, not a non-possibility of use of those techniques. We have responded to specifically that and all the other, of course, topics that we mentioned before during this call, and we wrote also a paper to basically describe a little bit more in depth what anonymizing techniques might be, because there was a confusion to even understanding in which direction, in which way, and how would we even explain the term anonymizing techniques or different terms that were used at the time within the regulation. And this is another very important topic. It's continued to being one of the most important topics within the industry, still trying to find solutions. Still, we know that there's a lot of projects and companies working on this, trying to think about also zero knowledge proofs, etc. But how do you think in a way privacy is addressed when it comes to this package? And what would be your comment here, Seth?
Privacy is not addressed when it comes to this package. It's destroyed. There is an enormous double standard in Europe when it comes to privacy. that hopefully I can sort of illustrate for you all here. So, in general, we think of privacy is good, right? In fact, privacy is a fundamental right in Europe. It's I believe it's Article 7 of the Charter of Fundamental Rights. And Europe has long prided itself on protecting privacy of citizens with things like the GDPR, for example, that is often held out as one of the EU's most successful pieces of legislation. And so out of one side of its mouth, the EU celebrates privacy and purports to take measures to protect it. But then out of the other side, you get this tremendous hypocrisy in the form of things like the transfer funds regulation and the anti-money laundering regulation, in which privacy is vilified and demonized and effectively outlawed. And it's hard to sort of square those two notions. I've spent a lot of time thinking about this. And the best that I can come up with in order to make this hypocrisy make sense is that the EU is very concerned about protecting citizens' privacy from corporations or private companies, but believes that citizens should have no privacy whatsoever from the government itself. And so you get bills like the AMLR that now sort of deputize financial institutions into quasi-law enforcement agencies and require them to collect vast amounts of information about law-abiding citizens' everyday use of their own property and report that to the government so that it can be monitored. So much so that in another part of this package that doesn't directly involve crypto assets is a limitation on the use of cash itself, right? So when this goes into effect, it will be a violation for any merchant to accept a cash payment over 10,000 euros. Right. So I don't understand why Europeans aren't more outraged by this, but the government is telling you that you can't use your own money to buy goods because I suppose they suspect you of being a criminal all the time. And and if you think about that in situation in particular, what's a merchant to do? You want to buy something for 11,000 euros. I guess they have to tell you no. I can't take your cash. You put it on a credit card. Why? So the government can track you. Is that the result of an institution that prizes and protects citizens' privacy? I don't think so. But here we are, and it exists even more acutely when it comes to crypto assets, where you don't get a 10,000 euro cap, it's zero. The transfer funds regulation applies at zero. A 1 euro equivalent crypto transaction is subject to the transfer funds regulation. To me, it's very disappointing that this exists and is being extended, and that the freedom and privacy of European citizens directly suffers as a result.
I think that's very important because what we are saying as an industry from the beginning is that, of course, we want to eradicate the anti-money laundering and terrorist financing to zero when it comes to fiat, when it comes to cash, when it comes to crypto assets. But in a way, it's also very important to understand what specifics do we live in, and this, in a way, the specific elements that the crypto assets industry is working with, and the completely new technology that we have that did not exist before, and how to regulate it in a more specific way that is aligned with the way how this technology works. I think especially what is important is for all the infrastructural projects that work on public blockchains. And in this case, I think that, as you mentioned, Seth, it is in a way disappointing to see how the users of crypto assets and users of public blockchains are going to be in a way tracked, double tracked on the blockchain, but in a way also in a non-pseudonymous way, also from crypto asset service providers and thus from the authorities. But at the same time, it is very important because if we think about the future of regulating crypto assets, we today live in this regulation era in a way that the crypto assets regulation is finalized. We're just waiting for it to be adopted. So the rules are very, very clear. You know what the rules are. They're finalized. They're out there. But we have some exemptions. And very soon, we're also going to see the European Commission coming up with a report when it comes to the revision clause. And in that clause, or later or sooner, maybe at that time or maybe later, but there is a discussion on potentially regulating, or at least looking into how to regulate DeFi. And in this case, I think that questions of privacy, questions of, in a way, financial privacy are very important when it comes to those specific transactions, and also using like dApps and other applications. So in a way, we'll need to work with what we have today. And in a way, what we're discussing here is that, and what we're saying is that the AML regulation and the AML directive are slowly coming to an end. From, I would say, advocacy perspective, there's not a lot of possibilities for it to be changed for the basically drafts that we have right now, but we still don't have the finalized draft. So we will see in which direction it will go. For us, it is very important that we share, and that we do share this information, and that we do have everyone that is involved in this industry understanding what's going on. Of course, it's important to do and focus on advocacy from the beginning, but I think the whole process is very important, and even in the secondary technical process. As discussed before, the EBA has already written and finalized guidance. There's going to be more in a way guidance like that coming up, and in those are very important, because there we really read all the details that the CASPs are going to use, but also in a way we'll understand how we are going to be affected as users, and in a way owners of self-hosted wallets. I would like to add just a very short part, because it's been discussed in the articles and also during negotiation process. It's the NFTs and the NFT service providers. Those have not been mentioned at the beginning in the first drafts, but then have been added over time. And what it is important is going back to how we discussed and what we discussed about the definition of a crypto asset service provider. In MiCA, the NFTs are excluded, so are not in the scope. And in the TFR, there was no discussion about the NFT service providers either. So in a way, I think most of the industry was advocating for them not to be included, also because we wanted to be aligned with the transfer of funds regulation and the text there. So in a way, that would be, I would say, a very welcomed option and outcome when it comes to those specific platforms and NFT organizations that use, in a way, and issue NFTs. So this is the last topic that would be a little bit more specific to the anti-money laundering discussion. I see we have another 15 minutes. I'm not sure if we have any questions yet, but if you do, please type them in. We're happy to take questions, especially Seth. And for the last questions, I would like you to maybe give us a little bit more of a broad understanding and your opinion on what the differences are between the US and the EU. You're very active in both of jurisdictions, also globally, but I think those are the ones that mostly take the most of your time. And of course, your kind of opinion on the future. What can we expect going forward, especially in the first half of 2024, before we have elections in Europe? And if you haven't heard that yet, half I think half of the population on Earth is going to vote this year, so that's pretty scary. But at the same time, it can be an awesome opportunity to basically change the way how we govern.
Yeah, I think I saw 2 billion people go to the polls this year. Maybe it's more. So I'll definitely speak to those two questions, Marina. But one last point that I want to make on the privacy topic that I think is important and isn't made enough goes to sort of challenging the premise a bit. And so Marina, you said, and I've heard this many times before. The goal or the purpose of all of this, is to try to get, crime to zero, right? Don't we want to eliminate all crime from our financial system? And it's a very easy sort of political talking point, and all the policymakers always say that our goal should be to get crime to zero, and everyone says yes, 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 of course, of course. I actually want to challenge that premise. Because it's totally unrealistic, and in fact is dangerous in and of itself. There has always been crime. There will always be crime. It is impossible to totally eliminate crime. The reason it's dangerous is when you start to think about what is required to even attempt to get crime to zero. So if we think about just in the financial context, what we're really talking about to try to eliminate crime, if it's indeed even possible, I suspect it's not, would be to go to a system where an individual would have to ask permission from the government before engaging in any transaction. Right? You have to go to the government and say, "May I do this with my money?" And the government would be able to say yes or no. Right? That is a totalitarian state of the most insidious kind. And even in that situation, I suspect that you couldn't fully eliminate crime, right? So is that a society that we want, right? Are we willing to sacrifice all freedom for this unattainable goal of zero crime? I would say no, right? I think freedom is valuable. You can't have freedom without privacy, so privacy is valuable, right? Of course, we don't want crime, but let's be realistic, and let's talk about what it costs and what are we willing to give up. And that conversation never happens, right? It's just, oh, we want crime to be zero. Yes, 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 yes. Of course we do, right? And that is dangerous because that allows you to do lots of authoritarian things that takes the privacy away from the people, takes the freedom away from the people in the name of this good thing that everyone agrees with, but is really very dark and scary when you think about what it means. And that's exactly what the EU institutions are doing. That's what these bills that we're talking about today, the TFR, the AMLR, that's exactly what they do. They're stepping stones on that path to totalitarianism. And I believe they should be resisted.
Maybe what I would add here is if we think about the big picture, now also the Digital Euro package has been discussed at the moment. And what we hear from regulators is mostly there's no anonymity. There will be a different level of privacy when it comes to the Digital Euro. And I think that's another step going forward into understanding, yeah, exactly, what our rights are at the moment, right now, what kind of rights we have, and then what are the rights going forward. I think with digitalization and understanding our digital, financial, and other human rights, we need to be very diligent when it comes to how are they executed, because in a way it's also a lot of technical questions and in a way operational stuff that needs to be cleared. But I think we need to be very diligent again whenever there's like a digitalization factor that comes and plays into the limitation of our rights in a way.
Very much agree with that.
So maybe, yeah, just a quick comparison, and then we do have a question. So I'll leave a few minutes for the questions as well.
Oh, right. I forgot the other part. Okay, so comparing these to the U.S. I guess a couple points. So the travel rule does apply in the U.S. as well, although its formulation is a bit different. The travel rule applies to transactions between financial institutions above 3,000 US dollars. Mechanically, it's very similar. The sending institution has to transmit information about the sender to the recipient. It applies equally to cash or fiat transactions as well as crypto transactions. The way the U.S. Did this was through a rule that designated crypto or convertible virtual currencies or CVCs as funds, and funds were already subject to the travel rule, so it just sort of tucked it in that way. No new legislation was required to do that. And so so there is an equivalent to the TFR in the U.S. There isn't really a direct equivalent at this point to the AMLR or sort of the rest of the package. I think that's probably the closest comparison. There's also not exactly a notion of CASP in the U.S. Instead, lots of different types of financial institutions, including those that deal with crypto, are considered either money transmitters or money services businesses, and those types of institutions are subject to the Bank Secrecy Act, which is the sort of the financial, the anti-illicit finance statute that applies in the U.S. And so there are a lot of similarities in that regard.
Okay, great. Thank you for that. So I'll start with the first question we have, which is, how do you see the impact and the actual day-to-day for merchants accepting crypto?
So that's a great question. There was an attempt by the European Parliament to include a limitation in the AMLR to restrict the ability of merchants to accept crypto asset payments above 1,000 euros. Fortunately, the Commission and the Council disagreed with that provision. I think more on sort of feasibility grounds than conceptually, but nonetheless, that provision was not included in the sort of the AMLR political agreement that was reached this week. So I expect that will not be in the final text when it comes out. What that means is that merchants don't have a limit on the amount of crypto they can accept for the purchase of a good or service in the EU, which is good news. In terms of the sort of the practical elements of how to do that, is not really my field.
Maybe what I would add, but that's again, I'm not coming from that part of the industry. I cannot talk in their names, but I would say that when it comes to the acceptance of crypto, in a way, the crypto assets service providers would be involved, specifically when it comes to custodials. So that would be something that I think a lot of services are already designed. There are some jurisdictions, for example, where in Europe, when you can already buy almost everything with crypto, and I think that's going to be even more acceptable everywhere else. We know now with the news of Bitcoin ETFs, a lot of merchants and also big platforms agreed, and they also publicly said that they're going to use Bitcoin for their payments. So I think this is just going to be a huge industry going forward. Are there any other questions? I don't see them. There's just one interesting comment. Turkey and some other countries also watching EU regulations to adopt for themselves. Definitely, I think there are some jurisdictions that are looking into what's going on in Europe and maybe trying to regulate better, or at least similarly to Europe. I would say that my wish would be that most of the jurisdiction would take at least this part from the crypto assets regulation from Europe, that we do say that crypto assets are a specific type of assets and they're not similar to financial instruments as we call them in Europe. At least that would be, I think, a huge, huge success. But otherwise, if there's no questions, I would leave you the last few minutes. Seth, if you have any general comments, anything you would like to say to the audience before closing. And for me, from my part, I would just like to thank you. It was brilliant having you here. We're going to share this recording. We did a recording. We'll also share very short clips, and we'll be sure to talk to you when we have the finalized versions of all those documents very soon.
Well, thanks again for the opportunity, Marina. I enjoyed our conversation quite a bit, and I guess what I would leave you with is a question that I also failed to answer before, which is sort of what's the outlook for the next few months going into election season. I think probably not a lot. There are a few sort of bills sort of lingering out there that I think the Belgian presidency will try to conclude quickly, but in a few weeks, really, I think a lot of the MEPs will be on the campaign trail and thinking more about the election than their work in Brussels. So I think the legislative pipeline will probably slow here very shortly through the election and actually probably into the fall as as the new parliament is seated and a lot of sort of procedural things happen before I think the sort of the legislative pipeline really sort of gets cranking again. I would expect this year to really the full year probably to be pretty light on that front in the EU, and expect it to sort of get up to the pace we're accustomed to again in 2025. And that's really actually similar across other major jurisdictions. In the US, I think there's a few months left maybe for Congress to do a few things, really probably until the end of the primary season for the presidential race, which will more or less be decided after what's called Super Tuesday, which is a day when most of the states hold primaries in March. And then after that, Congress will similarly shift to election mode, and representatives will be spending a lot more time in their districts than in Washington. And also in the UK, which is expecting an election later this year, looks to be a change election in that Labour is expected to win the majority. And there'll be a lot of changes thereabouts. So, I think across sort of major jurisdictions, this is a change year. Probably not a lot of legislative activity, and I expect that to pick up again in 2025.
That's a brilliant conclusion of this interview and this discussion. Thank you so much, Seth. Thank you, everyone that joined. And I'll see you very soon, I think, also with the topics of AML.
Very good. Always happy to talk.